Hey traders, Nick Shaheen here recapping the week ending February 13th, Friday. Scoreboard for the day, green across the board. Not only green, we had records, and let's switch over to see those records. All right, so let's start with the SPX, which is the S&P 500, and we'll zoom into 1 year. So you can see the record. It is an all-time high and barely just above that. And let's evaluate as far as volume is concerned. So we're going to hit the SPY, which shows us volume. All right, volume was just as much as yesterday, so still lower than the average 10-day moving average, I should say. We did break above that red line that I drew. However, we did have a tick up here, and no one's talking about it. So I'll keep ignoring it until somebody does something about it. Anyway, the SPX is an all-time high. We can say that. This is the SPY, and this is a breakout, albeit not massive breakout nonetheless. From the bounce on the screen, nice rebound. All right, what else is breaking out? How about the small caps? This is the RUT, small caps. A lot of lines, sorry about that, but they do count. Let's stop extending that one for a little bit. And this one as well. All right, so here is a lid, that area that is failed us a few times before. This was an area that failed us a few times before that, but we crossed both of these, and today we crossed even that one. And this was the high of all time, actually. Today, the close was higher. This is a bullish candle because it opened, they tried to sell it, and then they ran up and closed almost at the high of the day. We did close strong, and I'll show you why. But before we go there, I'd like to share with you, actually, let's look at the IWM, which is a sister. They should look the same. IWM 121.53. So technically, there's a breakout everywhere, so you have to respect that, and you have to give it some time to work itself out. I am not as bullish as everybody else. Why? Because this run-up was not based on a new development telling us that the economy is way better than ever. Some of it was that. Most of it was a headline that something bad did not happen. Why? There was a deal in Greece, supposedly, and a peace deal that hasn't been implemented yet. So by Tuesday, Monday we're closed. By Tuesday, if we come in and those two deals fell apart, you think we're going to be this exuberant? I don't think so. So the run-up has been more of a relief pop that something bad didn't happen. Given that this relief pop, I usually short them, but given that this relief pop coincides with a breakout, technical breakout, then you may have some follow through just based on technicalities. All right, the one thing I wanted to warn you about is the NASDAQ. Excuse me, I'm under the weather. This is the NDX, right? Also a breakout. Red and green, that's a pattern. Boom, broke out, 3 candles like you wouldn't believe, right? And let me zoom out a little bit. Is this an all-time high? No. This is 20 years. That's the dot-com bubble. That's the monthly. Every candle is 1 month. This month right here, this month right here, is March of 2000. That's the best we've ever done in the NASDAQ during the dot-com bubbles when we were buying Dawes.com, whatever, napkins.com, everything.com was selling like crazy. The highest close that month for the candle for the month was 43.97. Let's call it 43.98. Today's close, 43.84. 14 points away. 14 points away. Today's move, 36 points. So Monday, Tuesday, if we move another 20, 30 points, we'll be higher than that. Okay, the month hasn't closed, but if this month closes, we'd be higher than that. That's pretty scary. Yes, there was a long tail, that thin thing that takes us up to 4,800, so we still have 430 points to go. But look how long it lasted. Days. Just days. Before we crashed. Okay, I'm not saying we're going to crash. This was a wall. See how it climbed 400, 400, 400, 400, boom, boom. Here we're like still a steep, but not 400, 400, maybe 100, 100. Anyway, just something to be cautious about. All right, so back to 1 year so we can look at it this way. Back to today, what happened today? Apple happened. Okay, Apple was iffy all day, and then suddenly it woke up right here, right at this arrow, and took the markets with it. Boom. At this point, the markets were in danger. Had Apple not woken up, the markets would have closed flat to red, in my opinion. That's my own humble opinion. However, it didn't, so we're green. So next week, it's a binary event. What does that mean? It means that Tuesday, we can't trade Monday. The world will trade Monday. The U.S. is closed Monday. We will have to be slaves to what happens over the weekend. We expect the peace deal to be implemented in Ukraine. And if that happens, then yay, we'll celebrate it one more time. We already did 4 times. And I'm being sarcastic, but yes, we did 4 times. And then we also have the Greek deal, which is anticipated on Monday. So if we have a Greek deal on Monday and or we have a Ukraine deal, peace agreement actually implemented, then Tuesday will be an up day. Vice versa, if we have bad and bad, Tuesday should be a down day. If we're split decision, who knows? Regardless of what happens on Monday, we have a whole day to digest it off hours, meaning there's no session open, but we can still trade futures. So the markets in the US will have a day, at least 12 hours to digest it. That's usually good. It blows off a lot of steam. It prepares people for what's coming on Tuesday. So I'm not picking any bad fights for next week because there's only 4 days and it's binary, coin flips. I don't like binary trades, so play it cautiously. There's no need. Levels, SPX all-time high, RUT all-time high, so S&P and the small caps are all-time highs, NASDAQ close to it. Technical analysis tells us we should respect this pop, although I don't buy it. I should respect it. The macro hasn't changed. All we've been trading are headlines. This week's strength came all on headlines, 10, 12 points at a time every time the headline comes out, and it's the same headline, just regurgitated. Okay. Headlines cut both ways. You'll buy a headline, you'll sell a headline, and it's only a matter of seconds before you gain 10 points or you lose 10 points. So be careful. Things to play out. Okay, I don't just go and hide. This week, American Express lost Costco deal, so they punished it hard, right? So now it looks like it's the low. Yesterday I said don't catch it. I zoom out a little bit, and I see I made this note yesterday, 212, and I said, well, let's see the next candle and how it's going to handle this. This area is transitionary. It had a lot of action up here, so people willing to play it up here. It had a lot of action up down here, people willing to play it here. This was transitional. You might whoop, and there's no action down here. So I wanted to see how it handled it, and I said patience will pay, and sure enough, patience did pay. So I wanted to see if they really want to. Maybe now they're saying okay, it's 72 to 75. So I don't want to catch a falling knife now and be behind $4 or $5 already. That's a lot of money. So I'm patiently waiting before I do some credit put spreads. That's one thing. Also, Alibaba has had a good day today, but it's been out of favor. But long term, in my opinion, Alibaba is a buy unless they're absolutely lying about what they can do as far as numbers. So you can nibble along on Alibaba, but I give myself time. So I either buy the stock and forget it or do some leap calls. I buy some calls way out in time. I can do call spreads to lower my entry point and hedge my bet. Also, I can bet with the small caps. There is a bet out there of people that want to see the small caps at 123, actually 1240. So it is at 1223. It only takes another day like today almost. You know, today it was up 7 points. So if we had this repeat, next Tuesday would be 1230. So if you buy the 1230, 1240 calls, you can participate in those people. There's a lot of money there expecting it. I think it'll be a resistance, but we'll see. It all depends on the headline. If the headline is good on Monday, boom, right through it. So those are plays you can do cautiously. Other than that, it's time to the average retail investor to sit back and just sit on your hands and do nothing and see what the headlines are going to do, because we are trading headlines, so they basically level the playing field, because it takes away the advantage of somebody that does a lot of homework, somebody that trades fundamental, and it hands somebody who doesn't know what they're doing an equal footing. So why would you want to do that? Engage battle with basically somebody who doesn't know what they're doing, right? So I sit back, I manage the trades that I have, meaning when there's headline trading, I manage the trades that I currently have. I don't establish new big trades. I book profits where I have them, I add to some of my winners, I add to some of my conviction buys or sells, small. I adjust something here and there, I buy some defense if I need it, but I don't put both feet in big time. All right, Nick Shaheen signing out.